Dividend investing strategies for beginners. For beginners venturing into the world of finance, understanding the ins and outs of dividend investing can be a game changer. In this comprehensive guide, we'll delve into dividend investing strategies tailored specifically for those starting their journey in the financial markets. Introduction to dividend investing. Before diving into strategies, let's grasp the fundamental concept of dividend investing. Essentially, dividend investing involves purchasing shares of companies that distribute a portion of their profits to shareholders in the form of dividends. These dividends can provide investors with a steady stream of passive income, making dividend stocks an attractive option for long-term wealth accumulation. Dividend investing strategies. Dividend growth investing. One of the most popular strategies among dividend investors is dividend growth investing. This strategy involves selecting companies with a history of consistently increasing their dividend payments over time. By focusing on companies that exhibit strong financial health and a commitment to rewarding shareholders, investors can benefit from both dividend income and capital appreciation as the stock price appreciates alongside the growing dividends. Dividend reinvestment plans, DRIPs. Dividend reinvestment plans, commonly known as DRIPs, offer investors the option to reinvest their dividends back into purchasing additional shares of the same company. This strategy harnesses the power of compounding, allowing investors to accelerate the growth of their investment portfolio over the long term. DRIPs are particularly advantageous for beginners as they provide a convenient way to reinvest dividends without incurring additional transaction fees. Dividend yield versus dividend growth. When selecting dividend stocks, investors often face the dilemma of choosing between high dividend yield and strong dividend growth potential. High dividend yield stocks offer attractive immediate income but may lack the potential for significant dividend growth. On the other hand, stocks with lower initial dividend yields but higher dividend growth rates can provide substantial long-term returns through the compounding effect of reinvested dividends. Balancing between dividend yield and growth is essential to crafting a well-rounded dividend portfolio. Passive income with dividends. Building a passive income stream. One of the primary appeals of dividend investing is its ability to generate passive income. Unlike active trading, where constant monitoring and decision-making are required, dividend investing allows investors to sit back and collect dividends regularly without actively buying or selling stocks. By building a diversified portfolio of dividend-paying stocks, investors can create a reliable source of passive income to supplement their existing earnings or fund their retirement. The power of compounding. Compounding is the magic ingredient that fuels the growth of passive income in dividend investing. As dividends are reinvested to purchase more shares, the investor's ownership stake in the company increases, leading to higher dividend payments in the future. Over time, this snowball effect accelerates, resulting in exponential growth of both dividend income and the overall value of the investment portfolio. Harnessing the power of compounding through consistent reinvestment can significantly amplify the long-term wealth-building potential of dividend investing. Building wealth through dividend stocks, long-term wealth accumulation. Dividend stocks have historically proven to be an effective vehicle for building wealth over the long term. Unlike speculative investments that rely on market timing and capital gains, dividend investing offers a more predictable and sustainable approach to wealth accumulation. By reinvesting dividends and holding onto quality dividend-paying stocks for extended periods, investors can benefit from the dual advantage of regular income and capital appreciation, steadily growing their net worth over time. Top dividend-paying companies. Researching dividend stocks. Identifying top dividend-paying companies is a crucial step in dividend investing. While past performance is not indicative of future results, Companies with a track record of consistent dividend payments and growth are generally considered more reliable investments. Investors can conduct thorough research to evaluate a company's financial health, dividend history, payout ratio, and growth prospects before making investment decisions. By focusing on quality companies with sustainable dividend policies, investors can mitigate risk and maximize long-term returns. Examples of dividend aristocrats. Dividend aristocrats are companies that have consistently increased their dividends for at least 25 consecutive years, demonstrating a strong commitment to rewarding shareholders. These companies often belong to mature industries with stable cash flows and strong competitive advantages. Examples of dividend aristocrats include household names like Johnson & Johnson, Coca-Cola, and Procter & Gamble. Investing in dividend aristocrats can provide investors with a reliable source of passive income and the potential for long-term capital appreciation. Dividend investing tips for beginners. Start early and stay consistent. The key to successful dividend investing is starting early and staying consistent. The power of compounding works best over extended periods, so the sooner you begin investing, the greater your potential returns will be. Establishing a regular investment plan and sticking to it, regardless of market conditions, is crucial for long-term success. By consistently reinvesting dividends and adding to your investment portfolio over time, you can harness the full wealth-building potential of dividend investing. Dividend investing offers beginners a reliable and time-tested approach to building wealth steadily over time. By implementing dividend investing strategies such as dividend growth, diversification, and compounding, investors can create a robust portfolio capable of generating passive income and achieving long-term financial goals. With careful research, consistent investment, and a long-term perspective, dividend investing can pave the way towards financial independence and security. So, roll up your sleeves, dive into the world of dividend investing, and embark on a journey towards financial success.